This episode of EpicCenter is brought to you by Shapeshift.io, the easiest, fastest, and most secure way to swap your digital assets. Don't run the risk of leaving your funds on a centralized exchange. Visit Shapeshift.io to get started.
Hello and welcome to EpicCenter, the show which talks about the technologies, projects, and startups driving decentralization and the global blockchain revolution. My name is Brian Fabian Crane.
And I'm Meher Roy. Today we have a very special guest on the show, Changpeng Zhao, who is the CEO of Binance. So many of our viewers and listeners probably have traded on Binance, which is a crypto-to-crypto exchange. And we'll talk to CZ, as he's called, about his story in founding Binance, how it grew, and the challenges and opportunities for the future. CZ, welcome to the show.
Hi guys, very pleasure to be here.
So, tell us a bit about how you got to be involved in the blockchain space and how you entered this space.
Sure. I think that goes back to mid 2013. A friend of mine, his name is Ron Zhao, he asked me to look into Bitcoin and said it was kind of interesting. And he also asked me to look into Ripple at the same time. So he's the institutional investor into BTC China, one of the oldest exchanges that actually recently stopped operations. So that's when that's how I got into this. That's how I got exposed to the Bitcoin industry back then. That's what it's called. And even back then, I was kind of interested to do a first idea was, of course, for many people was to do an exchange. And I think back then it was like Mongox. I think Trade Hill probably just stopped. So it was a bunch of very early, sort of very, very early exchanges. But somehow I joined blockchain.info because I bumped into Roger Ver at the time. So that's kind of the early start. And then, so that's kind of how I got into this industry.
And so what was that like working at blockchain.info? What was your role there, and what were kind of the things you learned about this industry from that experience?
Sure. Actually, there's some really valuable experiences from that experience. So I was the third person in. There was Ben Reeves, who's the founder. There was Nicholas Carey, who was the CEO, and then there was myself. So I was the third person in. Ben Reeves is a very smart guy, but he's a young kid that just want to focus on technology. He's not a very social guy. He doesn't want to talk. He doesn't like to talk too much. Blockchain.info back in those days has some very interesting properties. It's a decentralized team. So when we had about 18 people, they were spread out in like I forgot like a dozen countries. They don't have no office back then. They also don't have a bank account. So everything was done in crypto in 2013. So that's kind of so everything was done in Bitcoin back then, basically. I think Ethereum wasn't even started. So so that was probably one of the very unique companies back then, and it kind of gives a very interesting exposure to be a pure crypto company, a company with no bank account, no offices, fully or relatively decentralized. So we actually have adopted some of those philosophies into Binance even today. So.
I mean, this is definitely one of the topics I want to speak a lot about, like how Binance is run. But when you think back to blockchain.info, how well did this work, this, decentralized company and crypto only? And what were some of the pros and cons of that?
Sure. I mean, basically, in a decentralized fashion, there are, especially when the team's decentralized, there are some disadvantages and there's some advantages. The advantages, you can hire people from all over the world. You're not limited to your own talent pool. But there's some very interesting disadvantages. Everybody's in a different time zone. Just trying to get a meeting together takes a few emails back and forth, and then usually take a day to organize a meeting because people are spread around all different kind of time zones. So the efficiency actually does go down, and especially if you have to make decisions, discussions, or stuff like that, it's a little bit difficult. And there are ways to overcome it. Basically, you gotta empower the people so each individual can make a relatively large number of decisions, and they can be siloed off. So there are different trade-offs and different ways to sort of run this kind of an operation. you also need guys who are like very proactive, who are self-motivators, who are very proactive. So you want to find guys who are really into, who really like what they do, who are really into doing this stuff. So they don't need to be asked what to do. They don't need to be told what to do. They will just find stuff to do on their own. So there's a lot of challenges. So it's not a very simple, straightforward thing.
So do you feel that worked well at blockchain.info?
To be honest, I think at blockchain.info, at the beginning, when we had a smaller team, it worked quite well. But when the team got larger, I don't think it worked that well. Um, so I think basically, when the team got larger, if you don't get when a team is small, when the early founding teams are all very hardcore crypto guys, so they share the vision, they understand the vision, they kind of work very hard around it. But when you get when the team become larger, it's kind of hard to make. Well, I shouldn't really comment, but I think so in the last couple of years, I didn't really follow blockchain.info very closely, but I think the speed of progress is a little bit slower than I expected, to be honest.
So what was the decision for you to leave blockchain.info? How did you make that decision? And how did you know it was the right time?
Well, actually, so for me, I've always been working on trading systems, mostly like trading systems for brokers, for exchanges, so I've been working for about 18 to 20 years now. So I've always been on the trading side, and blockchain.info is a block explorer plus a wallet. And it wasn't really where my specialty is. I mean, the technology is okay. So in 2014, my current business partner, she joined OKCoin first, and then she recruited me. She said, "Hey, do you want to work on exchange?" And so I joined OKCoin as their third co-founder. So that's how I left blockchain.info.
So your experience is on the technology side to build technologies for exchanges at Bloomberg, Fusion Trading. It's always been on that side, on the technology side.
Yeah, yeah. So even when I was an intern, I worked at a company in Tokyo who got like basically who are working on trading systems related to the Tokyo Stock Exchange. So even before I graduated, I was interning. I was writing software, mostly C++ code, for trading systems for in the Tokyo market. So, and then when I graduated, I took the same job, went back to the same company, and then later on, I went to Bloomberg in New York. I was in charge of the Bloomberg Tradebook Futures development team. So I was managing a relatively sizable development team for for futures trading systems. And so I've always been working on the trading side of things, and I was a developer. I was writing code, and then later on moved into management, I guess, in Bloomberg. And then I went in 2005. I went back to Shanghai to start my own company with a couple other guys, and we were doing trading systems for brokers as well. So I've always been in this kind of field. So it took 20 years basically.
Yeah, yeah. So then you were at OKCoin, and you were CTO there, and then you worked for OKCoin for around a year, and you then left on some differences. So tell us about that experience.
So one of the key differences, I think I can explain that a little bit better now, which is in a place where when regulations change very quickly, and there's like basically very high degrees of regulatory uncertainty, people are relatively short-sighted. They would just want to make quick money. Basically, if you have a 10-year plan and the regulation changes every 3 to 6 months, and there's a high degree of uncertainty, that 10-year plan usually doesn't work very well. So people are forced to have a shorter term vision. When you go more and more short term vision, people are more into short term gains, and they get into sort of questionable gray areas. And that's kind of different from the value view or the values that I've been brought up to from more of an international exposure. So I didn't agree with a lot of a lot of the ways the values are generated in there. So I left I didn't get there's a lot of decisions I didn't really agree with. I won't get into the details, but I just said, look, this is not really for me, and I left.
Yeah, I remember at the time reading about your departure because there was a lot of discussion around it. I think was there also a hack at that around then? Right, I remember there was something where there was a lot of discussion around OKCoin, and then kind of your departure as well came.
So the discussion came 3 months afterwards, over a contract between Roger Ver and OKCoin. It's a contract that I facilitated when I was at OKCoin. But basically, when I left, the contract was reviewed by both parties and was fine. And 3 months later, it came out of nowhere saying a bunch of debates. And so it is what it is.
So after OKCoin, you started your own company, right? And the company, as far as I understand it, was to focusing on building exchange technology. So can you walk us through like what was the decision making or the thinking behind starting that company, and how did it turn out?
Sure. So that company is called BJ Tech, and so in 2000, that's early 2015, and I thought about building an exchange again. And to be honest, I first thought about building a Bitcoin exchange, like a fiat to Bitcoin exchange. That's what most exchanges are back then. Um, and I looked around. I was missing. I had a couple of tech guys who actually pinned me and wanted to do something together. And so we had the tech team, a very small team, like a 3 people team back then. Um, but then we were missing the marketing and operations and customer support side of things. And when we were building it, was like, well, it's going to be quite hard for us to build this exchange, just only having a tech strength. So, and when we were talking with a couple other guys a couple other people who are either already have exchanges or who are planning to build exchanges, and they said, well, hey, Changpeng, why don't you just build a technology platform and we'll buy it from you? And so that gave me the idea. I said, hey, we could sell the platform as just as a technology platform. So we kind of morphed the business into that only within a couple of months, and we were selling systems. And then something happened in July 2017 where there was a lot of other what we call cultures exchanges in China that basically trade stamps, art, antiques, and all this other crazy stuff. And they had a very archaic systems, very slow. And they said, "Hey, Changpeng, you have this really fast system. Can you adapt your system to our needs?" Well, I said, "Fine, that's kind of what we do," and we adapted that. So in China, there was like at peak there was about 2,000 of those type of exchanges. So over the next 2 years, we sold about 30 copies of our exchange system, and it's always provided as a platform as a service. So people pay a monthly fee, and they get an exchange system, and we provide the back end, the front end, the mobile apps, everything. So we did that for 2 years, had 30 clients, and so that's the exchange system we built from scratch. But when we built it, we wanted that system to be very high performance. So everything was engineered. Everything is engineered not like a script from like the first cut of a prototype. It was always if it's something that's really advanced, that's really difficult, but can improve the performance, we always took the longer route. So it took us a good 2.5 years to build out that system. We actually stumbled on many problems during that 2.5 years. So and then at the end of 2.5 years, actually what happened is the Chinese government shut down all of those cultures exchanges. So most of the business dried up. Well, I said, well, now we look at Polynet was pretty big when early 2017. We said, well, now that market is quite big. We could do that, and that's how Binance was kind of conceptualized.
Wow. So, like, what must have seemed like a disaster, like the Chinese government changing regulations, or turned out to be a blessing in disguise?
That happened to us a few times actually. So we got lucky in a lot of places.
Okay, so that's when like you hit on the idea of crypto to crypto exchange. Now, like crypto to crypto exchanges are actually pretty old. Like they've been around since 2014, 2015, 2016. Didn't you feel in 2017 that it was like too late to start a crypto to crypto exchange?
Uh, so we actually, so in 2013, even back in the blockchain.info, we had discussions about a crypto to crypto exchange. So we said the fiat to crypto is the bridge. And once you're into crypto, you can do crypto to crypto. So that concept was was back 5 years ago. So we discussed that. Of course, the market wasn't quite there. Most of the alts at that time wasn't really worth trading. So there was really only Bitcoin. I guess repo was there. People were using it. So in 2015, we actually looked at that as well. And that's when I think Poloniex was just starting, and they were quite small. We said, well, the volume's not that big. And in 2017, though, we looked at it again. We said, well, they're making a lot of money. They're making millions of dollars a day, which is very impressive. But we looked at the system. We said, well, we can definitely improve on that. I talked with a couple of other guys, including Zen Tackett, who used to work at OKCoin, now works for a fund. And he said, look, if you guys build another crypto to crypto exchange that's fast and that has customer service or decent customer service, we're gonna switch very quickly. So there was a lot of unsatisfied demand in the market. I think even today there's probably still unsatisfied demand. I mean, we're not perfect. We have a lot of room to grow. So I think this market is still very new. So it's never too late. You just gotta start and push forward.
Yeah, it often looks like that, right? So that, in retrospect, you can say, actually, this was very new. There was still lots of opportunity. But then at the times, you see, okay, there's all these other companies doing it. Maybe I'm too late. But you did, like, you knew, I mean, I guess with your background and having built exchanges, and if you see that, okay, there's all of those things I can clearly do better, maybe it was obvious that there was that opportunity there.
Yeah, well, the way I view things is actually a little bit different. I always think there are more opportunities in the future than there have been in the past. It's just the opportunities may be slightly different. So we did a few things slightly differently. It is a crypto to crypto exchange, but we made the user experience. There's a lot of small differences. So, for example, we didn't just focus on English, where Poloniex and then some of the other established players only had an English interface. They pretty much only had a PC or web client. So we said, okay, well, we got to do better, right? We're gonna have multiple devices. We're gonna have Android apps, iOS apps. We're gonna have native PC client, native Mac client. We're gonna do multiple languages. So we did 10. I think right now we have about 10 languages. So we're going to focus on countries that don't speak English, or English is not the main language. So there's a lot of different ways you can play. And I at the time, even at the time, I was pretty confident there's a lot of opportunity. So but one thing I would say though, I thought it would take us a lot longer to become the world's #1 exchange, even when we started, and even like a week before we became the world's #1 exchange, I still thought it was going to take another good 6 months. So some of the things were a surprise. Yeah.
I mean, it's just something to point out here, right? We haven't really highlighted this, and some listeners may be aware of this, but I'm sure many others are not. So Binance is a company, right? So you talked about July 2017 when Binance started. Of course, there was some work before that kind of accelerated this, but still, it's less than a year. And in the last quarter, you guys made profit of $200 million. So the quarterly profit of $200 million in less than a year of operation. I mean, this is absolutely insane in a way. And I was before the show, I was briefly asking you, because I have never heard of a company that so quickly reached such a level of profitability. So it seems this may well be, the fastest company, in the history of all companies to reach that level of profitability in, such a short time. And then, of course, also in terms of company growth, right? I think you're 200 or 300 employees at this point, maybe already more, in such a, less than a year. So it just completely insane growth and an insane business that you've built in an incredibly short time.
Yeah, I think a lot of that is surprising to us as well. I think, but there's a lot of factors contributing to it, though. I think basically companies will continue to grow faster and faster because now the technology, the internet is there, e-commerce is there, and then crypto is there. So there's a lot of things that facilitate. There's a lot of things other people have built, which ensures much higher freedom, and the foundations are much more solid. So companies will continue to become faster and faster. But I think also one of the things we were lucky on is basically we are exchanges is a very special type of business where we're kind of in the center of value exchange, and we got lucky in a lot of places. I think our product is superior, and we have our service is decent, and we also our value proposition, or not our proposition, our current value system. So like what we believe in kind of rings very true with the community. So I think that helped people to understand what we do, why we do it, and they agree with our mission, with our principles. So they agree with why we do it, and so that kind of helped people to be more loyal or more to us as well. So there's a combination of different factors that helps. But I think there's a lot of luck too. So I think we just started doing the right thing at the right time, and the market exploded. So yeah, yeah. If everything starts over again, I'm not sure if it's going to be the same result, to be honest.
Super interesting. So you mentioned in your previous answer value system. What is the value system that you focus Binance around?
Sure. I think basically our value is to spread the freedom. So I think basically the crypto offers a different level of freedom in terms of investments, exchange of value, and holding different assets. So it's this freedom that we think are very beneficial to the society, and it's spreading this freedom that's our core mission. So so this is what we focus on, and we actually haven't really talked about this a lot in a lot of detail to our users, and we have always emphasized in protecting user benefits. So this is something that we don't really say, but we actually do, and people understand it. So people actually, a lot of our users tell us that, okay, you guys really take our interest in, you guys really understand how you guys are really working hard to protect us. So I think that kind of message, that kind of stuff helps, is very important to build a very strong community. So I think we probably have one of the most loyal and most supportive communities in of any business. So we have guys working. We have a lot of guys working for us basically for free on volunteer basis. We just give them recognition and we give them access to our team, and that's all. And actually most of them are financially free, and some of them are financially free because of us, because they bought into the Binance coin early on. So we now have like financially free, wealthy people working as volunteers, helping our other users. So it's a very unique situation. But I think that's only part, and other people have tried to copy that model, but you can't copy that model unless you have that kind of mission, unless you have that kind of value system. So I think that's kind of unique right now.
So you mentioned, right, this focus on spreading freedom and on protecting the users. But you said you guys didn't, actually talk so much about this. But so can you give some examples of decisions you made where, maybe one could have gone A, or one could have taken the decision to, in favor of freedom and protecting user benefits, that actually created that culture? Like, what were some of the critical decisions that you had to make to create this?
Sure. Yeah, there's some very clear decisions that when I look back. So for the first one came about 2 months or a month and a half ish after we went live. So back then, so this is literally, so this is September, early September. Chinese government said any ICO projects should return the funds to the investors to the extent basically possible. They didn't say how you do it, but so because of the news, the price of most ICO coins actually dropped. And so now the investors are actually losing money, and now we now got to return the funds to the investors. Most projects don't have, well, because the coins dropped in price, they actually don't have more money to make up the difference. So for the ICOs that we facilitated during that time, there was five projects. We actually said as a platform, not our own coin. Like this is other people's coins. So we said we will cover the differences to return that to the investors. We calculated how much it would cost us at that time. It costed us actually about $6 million in total. And this is back when we were 1.5 months old. So we didn't have as much money as we had today. So we looked at our financials. We raised $15 million US dollars in the ICO. We spent quite a bunch of it already. And we had about, I don't know, we had some money. We were able to cover it, but it was $6 million is a big chunk of the savings we had. But we said, okay, no, we got to protect our users. We're going to make up the difference. We will cover the costs. We will cover the differences, even for coins that's not related to our project. So when we did that, the Chinese, and this is mostly in China back then. So the Chinese community loved us. Everyone was saying we were setting the gold standard, the new standard for how to protect users. And when the other exchanges in China got shut down, and all the users, guess where they went? They all came to us. So it actually worked out in the long run. It worked out very well in the long run. But at the time, it was a really, really tough decision. And if things continue to go bad, we could be out of business, right? So we didn't know how the regulations are going to play out. So that's a very clear example of how some of the difficult decisions have been made. But we always follow our principle. So we have a principle, and we make the decisions according to that principle.
No, this is amazing. Yeah, and I can imagine that decision, right? Let's say you raised 15 million, you spend 3 or something like that, and then you give 50% of your money, because you feel like the right way. And obviously at that point, if it goes wrong, you also have the people who invested in your token sale in your ICO, right? They would then also suffer. So that's very impressive, and I can see that would be a very powerful decision to also establish that culture and community.
Yeah, and also so today we make a lot of those kind of decisions without my involvement anymore. So once you have the mission and value system established, now the team knows how to make decisions. So they just make decisions on their own according to those kind of values. So a lot of times, if this kind of decisions, they just make it on their own.
This episode is brought to you by Shapeshift, the world's leading trustless digital asset exchange. Quickly swap between dozens of leading cryptocurrencies, including Bitcoin, Ether, Zcash, Gnosis, Monero, Golem, Augur, and so many more. When you go to shapeshift.io, you simply select your currency pair, give them your receiving address, send the coins, and boom. Shapeshift is not your traditional cryptocurrency exchange. You don't need to create an account. You don't need to give them your personal information, and they don't hold your coins, so you are never at risk from a hacker or other malicious actor.
Shapeshift has competitive rates and is even integrated in some of your favorite wallet apps like Jax, so you can swap your digital assets directly within your wallet just as easily as putting on your slippers. Whenever you see that good-looking fox, you know that's where Shapeshift is. So to get started, visit shapeshift.io and start trading. And we'd like to thank Shapeshift for their support of EpicCenter.
So you did an ICO to fund Binance and you raised 15 million. So presumably in this episode, you yourself would have been required to return that 15 million back to your original investors. So how were you able to spend 6 million when you yourself were returning 15?
So that's another lucky break we had. By September, a month and a half later, by early September, our coin actually went up 10x already. So we sold half of our coins, and we still had half of like 40% of our coins. And the coins we had actually, and we also collected trading fees in our own coin, in the Binance coin. And the coins we collected and the coins we had, which we actually ended up never touching, went up 10x. So now instead of the 15 million we raised, and in theory the 15 million we had in sort of our own coins, roughly, the 50 million in Binance coins we had is now worth 150 million. So it wasn't completely that we were okay, but we decided to lock, like all 80 million of our coins. So we decided to lock basically 100% of our coins. We didn't really touch it. So we had some leeway, but it was a bit easier because the Binance coin price already went up 10x. So
Oh, so what happened was that the Chinese said, okay, you have to return the money. And then so people had the coin and they got back the money, at least the Chinese people, that they spent on the coin. Is that correct?
well, no, they have to return the tokens that they bought with, and then the project team is supposed to return the BTC or ETH that they purchased with. They purchased with.
Okay, so basically the Chinese said, okay, every project that did an ICO, they have to give the choice to the people that they can either keep the coin or they can return the coin and get their original money back. Was that what happened?
Well, I think the Chinese government didn't say there was a choice. The Chinese government wanted to say everybody have to return everything, but then for the coins that went up in value, nobody actually wanted to give it back, right? And you can't force users, you can't force individuals that way. You can force platforms and project teams because they're kind of more identified entities. But for example, the Binance coin, it went up 10x in value. Nobody really wanted to return it. And if they did, we said, fine, we'll just buy it back at market value, which is fine for us. But the government forced the projects and the exchanges, but they couldn't force the individuals.
Super interesting. So of course, like this sort of brings back the question of why did you go for an ICO in the first place? Why not venture capital?
So when we first, I think we kind of conceptualized Binance in the end of May in 2017, early June. So at that time, the first outside person I actually talked to is Da Hongfei, the founder of Neo. He's a very good friend of mine, been my good friend for like a few years. And we were all early blockchainers in the sort of Chinese community scene. So we've known each other for quite a few years. So he was actually so he's the first guy I spoke to, and they said, look, Hongfei, I'm thinking about doing this exchange, a crypto to crypto exchange. I think that's pretty much all I said. And he said, okay, I want to invest. And so he was the very first investor in our organization in Binance. And so so at the time, we were thinking about going through the VC route. But then at that early June, I saw another project doing an ICO in China, and I know the founder quite well. And he raised $15 million like in 10 days. And then mid-June, I went to a potluck dinner organized by Chandler Guo in Chongqing in China, and everybody there is talking about an ICO, and everybody there said, "CZ, you should do an ICO instead of doing VC funding." And when I saw the other ICO done in early June in 10 days, I know the founder really well. I thought to myself, wait a second, if this team can raise $15 million in this period of time, I'm relatively confident I could as well. I mean, from a reputation, from an execution, from all around, I think I'm no worse than that team. So I said, okay, let's try it. So we started, and then it worked out.
Would you say it was a relatively easy ICO for you to do and easy to raise the 15 million?
So our ICO process was, looking back, was all relatively smooth, to be honest. But I wouldn't say it's easy. It was one of the most demanding 2 weeks of my career, I think. So just to give you an idea, I lost about 6 kilos in that 2 weeks. So that's just my body weight. So I didn't sleep at all. So what happened is basically on June 14th on the potluck dinner, everyone's like, okay, CZ, you got to do an ICO. I said, fine, we're gonna do an ICO. So after that dinner, I made a call to my team who's in a different location. And I just said, okay, we're gonna do an ICO, and let's start writing the white paper now. And we need both Chinese and English versions. And I think that was about 11 p.m. And we kind of continued until like 4 a.m. And then we continued the next day. For the next 2 or 3 days, we were just writing this thing, and we were writing the English and Chinese version at the same time. By June 17th, so 3 days later, we had both versions ready. and without the advisor section. So and then I started emailing that version out to all my initial advisors. I think I got about 20 of them in about 24 hours. They basically all said, fine, I'll be your advisor. And then we started doing our ICO, and we did 5 sessions. Each session lasted about 10 to 15 minutes. So in total, we spent, in terms of the fundraising time, it took us about really literally an hour-ish in total time to raise about 15 million, but it was spread out over 2 weeks. But we wanted to raise most of the money on our own platform. So we actually we programmed that platform. We measure people who register our platform first will get the ICO allocations. So we did a lot of programming. We did the initial site with a user database and everything else during that 2 weeks, and we actually had a couple of hiccups as well. And originally, I thought about doing a around the world tour, like going to San Francisco, New York to do like road shows, going to Shanghai, Shenzhen, Tokyo. We ended up not doing a single road show. So I stayed in the office the whole time. So instead, we did a few like live streams. So we just used the internet basically. So we didn't really sleep much, and there was just so much stuff to cover. We started with we had a team of about 30 people, not for like 35, 36 people. So we used that team to do this thing, but then there were so many questions from users. I think we created about 10 WeChat groups, each group holding about only 500 people in about 3 days, and there was just so much going on. So that was from a workload demand perspective. I think that's one of the toughest periods in terms of workload. There was just so much going on in that 2 weeks. But the good thing is, in 2 weeks you raise 15 million, you're done, and so or at least you're not too worried about money anymore. So it's a very intense experience, but I think for any serious entrepreneur who is serious about that project, that experience is definitely worth it.
So you basically went from potluck dinner, people talking about ICO, and you're like, okay, I want to do that. And then do that the next day or the same day, and then 3 days of white paper writing, and then the ICO, or like, and so the time from dinner to ICO actually running was how long?
So I got back to the hotel about 11 p.m. and I called the team saying we're gonna do the ICO. And to be honest, some of the team members said, "What's the ICO?" So and actually, so before I own ICO, I've never participated in an ICO. I've never done one. I've never advised one. I've never bought ICO coins before. So to me, like, it was new, but I at least kind of knew what ICO is. But to some of the team members, like who said, okay, please contribute to the white paper, they said, what's the ICO? So, well, better read about it quickly. So but we got started on the same night, and we just worked until morning. And so 3 days later, after about 7 major iterations of the white paper, we kind of we were happy with both the English and Chinese version. So and then so the potluck dinner was on June 14th, and we finished the ICO on July 2nd. So that's the whole process from the minute we decided to do it to like having 15 million US dollars equivalent of crypto in our wallets. And there's actually a couple of guys who are very influential in that decision making. So I met Chris, the founder of Monaco, um, on the potluck dinner on June 14th in Chengdu in China. I did not know him before then, so that's the first time meeting him. He said he was in the middle of his ICO. He's already raised about 15 million US dollars, and I think his target was 20. And he said, look, from his decision to execution, it was 10 days. So he said, you can definitely do it in 10 days. I was like, seriously? So that was in like evening, that was like afternoon, evening on June 14th, 2017. So, and then he said, no, seriously, you can do it. And I talked to a bunch of other people. They all said, you can do it. I said, okay, let's do it. So
I think this is a little bit of the answer to like, how did you manage to grow a company, within like less than a year from nothing to, 200 million revenues, hundreds of employees? Is like that speed of execution and decision making is just absolutely insane and extremely impressive to like, so quickly make that decision, move quickly, no time lost on anything. So yeah, hats off. That's really, that's something, right?
yeah, so I can elaborate on that a little bit if you're interested, basically. So one of the things that I think is very critical is we really don't waste a lot of time on decision making. We spend most of our time on execution. So one of the unique structures in our team is people do give me a lot of respect, and so usually when I make a decision, people just execute. So and they're very strong in execution, so they get things done, and they execution so much faster than usually when they say I'm done with something, it's usually before I think they could be done with it. So they usually they're very strong on the execution side of things. So we have a very simple decision making process, and we don't really dwell on it. And once we decide, we just execute. So that has always been the Binance model. The other thing that's very important is there are a lot of times when we are not exactly sure whether something we do will be beneficial or not, but we would experiment. We would just do it, and then some. A lot of times, good things happen. So I'll give you another example. For example, when Malta is a country I'm actually not too familiar with before, but we heard good things about that, and it's quite far away from Asia. So, but people recommended I fly there and meet a bunch of guys and find things out. But to me, it was like far away. Things are unclear. I don't really know anybody there. But I flew there to meet the guys and to find out, and that turned out to be a really good decision. That helped us, like literally a month later. So there's a lot of those kind of things where you just have to execute. So that's kind of what we do.
You mentioned you guys use a very simple decision making process. What's that decision making process?
So basically, I tell all my team, if you're very comfortable with the decision you have to make, if you're relatively confident about that decision, then just make it and just execute. If you're not too confident about that decision, then ask two or three people beside you, whoever that is. It might be your colleagues, it might be your boss, it might be your subordinate. It doesn't matter. And if you're really not sure, then ask me. Um, I have a decision making philosophy that if I make like 80% good decisions, it's usually okay. As long as the 20% decisions are not fatal major decisions. So when I make major decisions, I usually consult somebody. But we also avoid large team decisions. So I specifically said, look, if your decision process involves more than like 4 people, that's usually a that's usually not good. That's usually not a good way to make decisions. You feel like we never have like 10, 20 people in a room trying to make decisions. That's usually bad. It wastes a lot of time, and you make decisions that are usually compromises. So we keep our decisions process very simple. Um, and sometimes, hey, look, if we make a not so good decision, we kind of go sideways, and all we got to do is make sure that we come back to our main trunk quickly enough. So that's kind of what we do.
So now, like going back to this ICO, Binance actually took a very unique model with the ICO, because in some senses at that point you were building a centralized exchange, and generally we tend to think that coins fit decentralized networks better than centralized exchange businesses. So you bridge the gap using a special model. So tell us what the model for the Binance Network token is.
So I think the Binance coin is one of the first tokens that I know of that's used for centralized business, and it's used in such a way that it's not so much a blockchain business. Our token is just the ERC20 token so far, and it has benefits tied to our project. And actually, initially, some of the people that I consulted say you probably cannot do an ICO on this because you're not doing a blockchain. Strictly, it's not a blockchain project. You're building a centralized exchange, which is different. I kind of ignored that. I said, look, if you have a digital blockchain token that people can trust, and if it has association with your project, and if your project does well, and this token will rise in value, I think that model will work. So we tie the token with utility on our platform. So basically, if you hold the token and when you use the token to pay for, when you trade on our platform, we can deduct the trading fees from your token reserve, and you'll get a 50% discount. So we adopted that early model, and later on, when we actually build a decentralized exchange, like a blockchain-based exchange, and we can convert that token onto a native token on that blockchain. So we did that, and it was a relatively novel idea at the time, but to me, the economics makes total sense. Some people got it right away. Some people asked a lot of questions, but I think so far it kind of worked out pretty well. And now a lot of people are copying our model, which is great. We want them to copy, like from our token economics model, we want people to copy as much as they can.
Yeah, and one thing that you haven't mentioned here in terms of the model, right, is that Binance, the company, right, Binance the company makes profits, and those profits, first of all, are like unrelated to the token. Although I guess some of them are that you directly earn revenues in the token because people pay less fees if they pay the fees in the token, and then every quarter you spend 20% of the profits in buying the Binance token and destroying it. I think that's also a very interesting model, right? Because it's almost like a dividend, at least economically. Of course, it doesn't have the downside of a dividend, which is dividends is probably like taxable income for the recipient, whereas this would be a capital gain thing more. And so yeah, and then of course it directly ties the value of the token to the success of the company, which is clearly very powerful. So yeah, I think the token economics make a lot of sense of what you've created.
Yeah. So actually, a lot of people didn't understand the burning part. That's a very interesting aspect of it, because the advanced users, or the savvier investors understand it right away. But there's so much misconception around it. The burn. So every quarter we use 20% of our profits, and we burn that equivalent value in Binance coins. So as you said, that removes a lot of the problems, like the taxation, the distribution mechanism. We have to pay network fees, transaction fees. So when we destroy a portion of it, that financially it should be identical to distributing that dividend to other people. But then we are mechanically, it's not a dividend. So we of course are always free to destroy our own coins. Anybody can destroy their own coin if they wish to. When you destroy it, your total supply goes down, and the Binance coin still have to represent the value it was representing before. So this is the exact opposite when you print more money, right? So when you do quantitative easing, you're literally basically taking money away from every person's bank account. And if you did that, people will complain. But when you print more money, people don't complain for whatever reason, which I kind of don't understand. Yeah, so that's kind of our mechanism to do to spread the benefits of our profits to the user, but without actually doing the actual sending of money. We just burn what we have, and that works out quite well. So I'm surprised not more people have copied that model. Many people have copied the buyback, but they don't burn, which is kind of cheating. So,
But to me, this raises an interesting question. So presumably, like, you have your company and that has shareholders, and then you have the token, and then there are token holders. And ultimately, in your model, it's like, if $1 is coming into your company as profit, this dollar must now be split into two communities: the token holders and the shareholders, right? So like 20% right now goes to the token holders, and like presumably 80% goes to the shareholders, but in reality for the shareholders is reinvested and things like that. So now you have basically like these two communities, and their interests might not always be the same. So doesn't this model like create the basis, the fault line for a future conflict between these two communities?
There's 2 points here I kind of want to touch up on. One is the shareholder versus coin holder situation. So um, the coin holders hold the coins, and we use the profits going to the company, and we use 20% of it to burn, and we basically destroy that, which benefits the coin holders in an indirect way, but very financially applicable, right? But for the shareholders, they retain the other 80%. We retain the other 80% in the company, and we either reinvest into the company development, or at a later stage, we may actually do a dividend payout. So, which the shareholders will get directly. And also, the shareholders get a few different things. For example, Binance is a company, and if the company valuation goes up, the shareholders are benefited. The coin holders, they hold the coins. If the coin value rises up, so there's a couple of different dynamics, right? So basically, for example, if the platform is doing well, and one of the key metrics of doing well is the number of users. So let's say the number of users increase quite a bit. So now the trading commissions that has to be spent on the platform increases, which increases the utility value of the Binance coin. The Binance coin price will go up. When the Binance coin price goes up, the amount of coins that the team holds will go up. So it increases the value to the company. For the shareholders, the platform value also goes up. So there's another benefit to that. So there are different dynamics at play, but the shareholders don't have the liquidity of the coin holders. So the shareholders, because we're a private company, and they don't have that kind of liquidity. Whereas the coin holders, they can choose to sell their coins at any time on our exchange. So there's some interesting dynamics people still don't really quite understand. And to be honest, I think we're still in early stages in this type of structure. In terms of balancing the benefits, I think that's a very simple thing. We very clearly promised what the benefits of the Binance coins are, and we honor that very strictly. So we got to make sure that we honor that, and usually probably a bit more. So we give incentives to our coin holders very often. The basic part of it is obligation, right? So we make a promise, we got to keep it. That's just integrity, credibility. That's very, very important. And then we over time we do other stuff to sort of help our community grow. You can consider that as marketing dollars, or helping the community, however you call it, including the amount of money that we said we're going to cover the differences for the ICO returns, the $6 million. So that's a decision that as a company, as a company operation, we will make as an operation team. So how we spend our company money, which affects our shareholder interests. But that's a very common, typical, that exists in any company that doesn't do the ICO. So for me, the separations are very clear, and the different aspects of the balancing the benefits of the two parties are very easy to do. So that's just in our structure. In other structures, it may be a little bit different. So we'll see.
Maybe I can explain a situation and see how you would decide. So in any balance sheet, right? In any account statement. So there's the account statement, the balance sheet, and there's the cash flow statement. So that's true for your company. Now let's say it's the year 2020, and you're making your account statement. So it's early on in the year, and you're deciding. You're making decisions that are going to impact the account statement for 2020. Now, how much you are going to spend for research and development can determine what ends up as profit. So let's say you make a revenue of right now it's $800 million in revenue. So let's say you make a revenue of $2 billion, and whether you decide to spend 200 million in R&D or 500 million in R&D is going to determine what gets left as profit. And then whatever gets left as profit, 20% of that goes to the coin holders, right? So in some senses, like you as CEO have have decision-making capability on R&D that is going to determine how much actually goes to the coin holders. Now, the shareholders obviously want you to do more in R&D because that might create a future product unrelated to the coin holders. So let's say you have a different product idea that is not related to the coin holders at all, but that will benefit the shareholders. So the shareholders want you to do more R&D, but the coin holders rationally want you to do less R&D because that is greater profits.
So I think in that kind of situation, what you described there is a very short-term vision for the short coin holders. So, well, I think there's two things, right? So we should not be if we're spending our profits on some other product unrelated to our coin, and so that benefits our shareholders later, and that does not benefit our coin holders. That's not good. So that's just unethical in my opinion. So that's why you will see that we actually have included many other businesses in Binance, and all of them have used Binance Coin. So we did not do another ICO. We did not do. So we actually have a media platform. We have an ICO platform. We have a so all of our new businesses are directly tied to Binance Coin. So so I think basically you should not use we should not use our profits from our exchange to do some other unrelated business that does not benefit our platform or basically our coin holders. The second thing you describe is the coin holders just want the price to go up without us doing any R&D work. That doesn't really make sense because if we don't invest in our product, if we don't make new features, if we don't keep our products competitive, and if we don't innovate, over the long run, the coin price will drop, right? So basically, let's say we just keep that platform, if we go to one extreme, it'll be quite easy to understand. Let's say that we do no R&D. That's not good for the coin holders. So let's say we fire all of our developers, and so now we can save costs. So now our profits will go up. But guess what? We will not be competitive. So Binance.com will stay exactly the same. We'll just keep the operation team, and hoping that this way you'll give us the highest profit for this quarter. But guess what happens next quarter? Our competitors gonna continue to improve, and everybody's gonna go to them. And let's say we say, okay, no, we want the maximum profits, so we don't want to reinvest, and we still don't hire developers. Over a couple months later, nobody will be using our platform. Guess what's going to happen to the coin price? It will drop to zero. So I think in what you described is just a long-term versus short-term gain, and that applies equally to coin holders and shareholders. I think both of them wants the platform to be bigger, wants the platform to have more users or more valuable. When the platform does that, both the coin price will go up and the shareholder value will go up. So I think that there's in the current situation for Binance, I don't see we have that problem at all. So so that's kind of my view on that issue.
That makes sense. Now, we talked a lot already about Binance. Now, let's move a little bit to some general topics. Now, in particular, one that's very interesting is the topic of regulations. So you started in China, right? So regulations even early on shaped the company, right? In that it kind of shut down your customers, and then you decided to start Binance. So can you just run us through, like, what are the different ways that regulation has kind of shaped the course of Binance up to this point?
Sure. I think different regulations affect us different ways. Basically, we have always adopted a stance where we will not go against any government. We will not go against any regulation. We will always be operating legally in any country, any jurisdiction. So if a country's regulation are shaping so that it does not allow cryptocurrency businesses or exchanges, we will simply move to a different country. So and we are looking for countries that have favorable regulations. Interestingly, some of the negative regulations actually helped us a few times. So when the Chinese regulation said no more exchanges in China, they shut down all the exchanges in China. We luckily moved out right before that. And that was a very lucky decision, to be honest. And when we stayed alive, actually a lot of users came to our platform, and that helped us boost our initial user base. And then recently this year, we are seeing a lot more countries who are realizing that favorable regulations towards the blockchain industry would encourage economic development. And now this year, we're seeing a lot more favorable regulations coming out. So now exchanges are they're legal exchange license in many countries now, including the U.S., including many other, including Malta, including Bermuda, including hopefully soon Taiwan. So now we have a lot more choices to go, including like Africa, Uganda, right? So the regulatory space is actually very, very important. But I think we have gone past the point where all countries view blockchain or crypto as negative. I think now a lot of countries realize that this is positive. So now I believe we will see more adoption of we'll see more regulatory adoption and more positive regulatory changes in this space, which is going to be extremely beneficial for Binance. So for Binance, we are looking for countries who have we're always on the lookout for countries who are extremely positive towards blockchain. So Malta is extremely positive. I think Bermuda will become very positive very, very soon as well. So yeah, so I think before there was always a risk factor to us. Like people kind of worry about regulations killing this industry, but I think that worry can be pretty much that worry is gone. Right now, it's just a matter of speed, how fast each country adopts blockchain regulations that are favorable. And I think there's going to be a lot of competition among different jurisdictions. So I think which will be very good for us.
So I certainly agree with you, right? That a lot of different countries will see this as an opportunity, right, to attract business, and so that we will not have that, like, the whole world and all the countries say no. But if you look at the US, where there's been a lot of attention around regulation, right, the US kind of interpretation tends to be very broad. And now if, they say like, okay, let's say somebody has US customers, US regulations apply to them. And particularly with the SEC, there seems to be clearly the trend that they will treat many, if not, the vast majority of token sales as, securities. And, maybe down the line, tokens can become, non-securities and tradable. But, of course, securities means, accredited investors, registration, all kinds of stuff like that. So I'm curious, like, how do you deal with that, Binance, both regarding Binance token, but also regarding many of the tokens that will be traded on the platform, that have that risk of, potentially being classified as a security, and then, of course, potentially having a regulatory risk towards Binance, the company?
Sure. So for the security aspect of it, we take a very simple approach. We just ask project teams to supply a legal opinion stating that they are not a security. So we leave that legwork to their lawyers. So they need to find a lawyer in whatever jurisdiction they are operating, or their teams are operating, and they basically got to have the legal opinion that they're not a security. Even that can sometimes have issues because, for example, if the lawyers in one location, and sometimes a different jurisdiction, different location may not honor that lawyer's opinion, and then we will ask the project team to say, hey, look, can you get a second lawyer's opinion if needed? So that have happened so far. That have happened. So, but that's a relatively easier problem for us to solve. Your previous point about basically, for example, a lot of the regulations right now today are overly strict and overly complex. I think what people don't realize just yet is you can't just copy the existing regulations into crypto. That approach is almost guaranteed to not work well. So it's a very simple analogy to it. You don't want to copy how you run a postal office into how you run an email web or an email server, right? So those are two different businesses. You can't just move one set of management practices onto the next one. So you can't manage internet business the same way as you manage a traditional, say, factory. But I think the different regulators are now slowly understanding this. So I personally believe that the regulations have to adopt, or the regulators or the regulatory approach have to adopt to a new industries. You can't just take the old one onto the new one. Unfortunately, there are different forces at play. Of course, a lot of the regulatory bodies or the regulators, a lot of them may want to retain their power, their influence, etc. So there will be some missteps in this endeavor. Not everybody is going to be making perfect decisions every time, but I think enough people will make good decisions. And the competition will keep the industry going. So that's just how evolution works. So I'm pretty confident at this point, basically.
What specifically attracted you to Malta?
Initially, it was one of our users or friends who recommended me to go to Malta and meet with a bunch of very relatively senior people. So I went there, but after going there, it becomes very, very clear. Malta understands the importance of leading the next fintech revolution. So they understand. So Malta has traditionally been a financial hub. They were very forward in terms of multiple financial regulations, including the online gaming industry, including the online poker gambling industry as well. So they kind of understand this type of industries, and this traditional finance industries has been a little bit of a decline recently around the world, and they kind of felt that as well. And as a relatively small country with limited natural resources, they understand they need to leverage their own management leadership, or basically management of the country, management of this of the industries well to be able to compete. So they understand this mentality. They have this mentality. They need to service the industry. So when I went there, it was very clear, from the prime minister down to the current party in power to the opposition party, everyone to the Ministry of Finance to the Parliament Secretary, everyone wants to make this work. Everyone knows the importance of properly, healthily grow this blockchain industry. So when I went there, different to many other countries, there was zero education that I have to do. Like, I don't have to tell them what is a blockchain, how transactions work, what is a token. They understood all of this, and more. They know that this is important. They know this is good. So it was a very easy conversation. And after going there and seeing the proposed bill that they had in place, after reading that, all the comments I had to give them was you got to make this place a little bit stricter. You can't be too loose here. So they were overly easy actually on the regulation. So it was quite an easy decision afterwards.
Very interesting. So actually, like this is the interesting piece that now with Binance, I hope Binance succeeds an order of magnitude bigger, and we actually have like a multi-billion unicorn company that came out of an ICO. And so like, because like these things will also set examples for the future, right? So from that sense also, I think as time progresses and successes like Binance emerges, maybe the value proposition is easier to communicate to regulators as well. One of the final topics we'd like to get into on this show is the topic of decentralized exchange and Binance's plans up therein. So like, many people think that in the medium to long term, at least in the crypto to crypto space, exchanges between users will be decentralized rather than centralized as they are today. What are your thoughts on this topic and where the future lies for crypto to crypto exchanges?
Sure. So just back on your first point a little bit. I'm very honored to have Binance be the example people look and follow and learn. So that's a really good thing. So we're very happy for that to happen. And I really want to see more and more unicorns going through this model. And I think we will see that very, very soon. I think we're going to see many unicorns going through the ICO model, which may or may not be blockchain-based projects. But the more startups, the more unicorns there are, the more the more quicker our overall economic or technology advancements are. So I'm very hopeful to that. In terms of decentralized exchanges, I think both centralized exchanges and decentralized exchanges will exist for quite a while. I think decentralized exchanges in concept is quite good, but in practice or in real life, there are some shortcomings in terms of technology, what the technology capabilities are, and it will take a while for them to fully eliminate centralized exchanges. So for Binance, we are doing both, but of course we do the centralized one first. So so conceptually, decentralized exchange have many benefits. The exchange does not have the whole custody of the user's funds. The user can stay anonymous. Everything happens on the blockchain, so there's no regulation, or there'll be little regulation. So it's freer. There's higher degrees of freedom. But in reality, the current when you have a blockchain, that means there's a network computers that need to synchronize with each other. That itself, by default, will be slower than a single computer making a decision, save the results, and you're done. So for the foreseeable future, the centralized exchanges will always be faster. And also from a competitive point of view, um, say if we want to do a decentralized Uber, right? So technically it can be done. I think, well, conceptually it can be done. But guess what? If we have a centralized Uber right now, if the decentralized one is kind of gaining momentum, the centralized one could say, we're going to run a campaign. We're going to rebate $10 for every ride you take. And the decentralized one is going to be kind of hard to do that. So with a decentralized organization, you have to really plan ahead on how your ecosystem works. And you can't do this short-term quick adjustments on marketing campaigns, free gifts, and a lot of this stuff. So technology-wise, until the decentralized exchange become fast enough, they will not have the liquidity that the centralized exchanges do. And liquidity matters a lot when you trade. A high liquidity exchange where there's very deep books, you can buy and sell very large quantities without moving the price, and which will basically save you a lot of money. So for the short term, centralized exchanges will be there, and they will serve different purposes. Over the long run, I think eventually decentralized exchange probably will become the norm when the technology gets better. So we're very happy for that to happen, and we are making our own decentralized exchanges. So we have multiple implementations of our decentralized exchange, and we're actually promoting other decentralized exchange implementations as well. So we want others to try to disrupt us, and at the same time, we're trying to disrupt ourselves. So we'll see how that goes. But I think that's going to take a few years.
So this actually does kind of tie into something I wanted to ask about before, but then didn't get to. So you mentioned, okay, let's say you had a decentralized Uber, then some of the decision making, let's say marketing spend, gets maybe more complex. And of course, there is the idea of having decentralized autonomous organization, basically entire organizations where then coin holders can participate in the decision making. And do you think in the long run, actually Binance as a company will also move towards a more decentralized model so that, maybe it could be fully decentralized?
Yes, absolutely. We are trying very seriously to turn Binance from a company into a community. So, but I think the transition will take some time. So we first turn from a pure company into like distributed teams, distributed people working around the globe on Binance. The second step would be, let's say we would want our Binance chain, our decentralized exchange implementation to be live first. In the earlier versions of that, some of the decision makings or a governance of the development may still lie very heavily with the core team. But over time, we actually want to shift a lot of the governance out to the community. So even today, even in our centralized exchange, we rely on a very large number of volunteers, what we call the Binance Angels, to sort of run our community and our ecosystem, really. So we are exploring multiple ways, both in the centralized and decentralized models, to be more decentralized, to be more community based. So I think that's going to be a theme we will continue to push. And in my mind, I'm really hoping 5 or 10 years later, it will be a fully decentralized thing where hopefully I don't have to do anything. I just hold my coins and do video interviews here and there, and the whole thing runs itself. I'll be very happy. So that's kind of the ultimate goal.
So, like you mentioned that Binance might disrupt itself, right? Like you might like invest on decentralized exchanges and build some of your own. Do you have any thoughts on what the design for your decentralized exchange would look like?
Sure. So we encourage almost every kind of decentralized exchange, and we list them. We help them get liquidity. We promote them. But for the Binance chain, my philosophy is quite simple. We want to do a chain that issues tokens and trades tokens. So those are the two main features we want to do. Um, so uh, so from my perspective, I think that's very important. Um, uh, our chain will not have a lot of complicated or advanced features. Like a lot of these other chains have like really strong smart contracts, different meta platforms, side chains. They have all this bells and whistles. I think the Binance chain will be more focused on the actual exchange feature. So we want to be able to trade one token against another, but we want to focus more on performance and speed. It is my belief that for an exchange, performance is probably more important than features. I mean, today, even if you look at Binance Exchange, we actually have less features than some of the other exchange platforms, but we are fast, and people like the faster aspects of it. So that's kind of not very at a very high level the design decisions that's driving our chain design.
Okay, so you actually see the Binance chain then also functioning as kind of an ICO chain where you can issue tokens, maybe a little bit like in Ethereum, you have a ERC20 standard, which has been very powerful in issuing tokens and doing ICOs. So if you could do that on the Binance chain, and I know you guys have done some work in helping people do ICOs, then you can issue them on there and trade them straight away.
So that's exactly the idea. So with Ethereum, you can do a lot more other stuff. The smart contract solidity, you can do a lot of other stuff. So our aim is more of a specialized chain where it's issue tokens and trade tokens. And so we will not have all the bells and whistles of Ethereum, but we probably want our blockchain to be faster in terms of at a higher capacity in terms of processing capability.
Cool. Well, this is fascinating. So let's do one last thing, one last question, kind of before we wrap up. So what are your thoughts on the kind of crypto markets? Like, where do you see things going in next year? Do you think we're going to see a lot of growth, or how is regulation going to affect this? Like, what are your kind of expectations for how the space will evolve?
Sure. So I think in terms of regulations, as I said just a little bit earlier, I think we'll see more and more countries adopting more and more favorable regulations and more smarter regulations or more fit regulations for the blockchain industry. So I think this will be extremely positive for the entire industry development and progress. Um, from from the ecosystem side, I think we will see a lot more coins. So I think more and more projects are gonna like a lot more projects are gonna use ICOs to raise money than traditional VC routes. So as a result of that, we're gonna see a lot more coins. With a lot more coins, we're gonna need exchanges to provide liquidity to all of these coins or change between the coins. Um, so I think exchanges will continue to provide a very important role. I think we're going to see a lot more exchanges as well. And the other thing that's in terms of the ecosystem, we need to see a lot more wallets. Right now, I think there's still a lot of improvements or room for improvement in the wallet space. We need different type of wallets: hardware, software, more secure, industrial wallets that can handle millions of addresses, millions of transactions in one installation. So that aspect of it, I think we will see a lot more wallets. I think mining is an industry I kind of understand, but don't really know them in detail, and it's a very big, very important industry. So I think things will continue to happen there, but I'm not an expert. Um, we should see a lot more payment gateways, a lot more merchants, a lot more merchant adoption. So I think in all of these areas, we'll see a lot more growth. I think basically the current exchanges are gonna get probably 100 to 1,000 times bigger over the next few years. So that and as a and I think that's mainly going to be as a result of the industry getting 100, 1,000 times bigger. And when the industry does that, the coin price is probably going to do similar things. So I don't really want to make any like sort of hard predictions on where the coin price is going to be, but I think we have a lot of room to grow.
Cool, fantastic. Well, thanks so much for coming on. That was absolutely fascinating, interesting conversation, and loved learning more about Binance and what you've built there. So thanks so much for joining us today.
Thank you very much for having me here. It's a pleasure.
So, of course, we're going to have show notes, so links to Binance and some of the resources around Binance if people want to learn more, use the platform and trade on that. So there'll be lots to check out. And thanks so much to our listener for once again tuning in. So we put out new episodes of EpicCenter every week. You can subscribe to the show on iTunes, SoundCloud, your favorite podcast app, or watch the videos on youtube.com/EpicCenterBitcoin. And yeah, if you want to support the show, you can leave us an iTunes review. And otherwise, thanks so much. And we look forward to being back next week.